Today is Sunday, February 8th, 2026. While most people around the world are relaxing and the big stock markets in New York are closed, something huge is quietly happening in the futures markets. The dollar index, called DXY, has broken below the 97 level. This isn't just a small fix. This is the money system admitting something big. And the number making central bankers really nervous right now is this. Silver is now at $115 per ounce. But hold on. The wildest thing isn't the price of the metal. It's how quiet the stock market stays. The stocks of silver mining companies are barely moving. Priced like silver is still only $50. I want you to do this right now. Shut down your fun apps and social media tabs. What I'm about to tell you isn't a guess. It's real math data that everyone has ignored. This is a once-in-a-lifetime shift of wealth. Where are you watching the fall of regular money from? New York, London, or Shanghai? Tell me in the comments below. Let's do a close check on the current market prices to see why the mining area is the most wrongly priced thing on earth right now. We have to ignore the bright red and green numbers on stock screens and look straight at the real numbers of how they operate. This is where the real check starts. And this is where the huge difference jumps out to anyone who can do simple math. The market has a bad case of mixed up thinking. It sees silver selling at $115 an ounce. But it still prices the companies that dig it up like the price is $50. Why is this going on? It's because regular investors, and even the computer trading programs that run Wall Street, are set to think prices always go back to average. They bet this big price jump is just short-lived weirdness, a bubble that will pop and drop silver back to $30. They're frozen by fear of buying at the high point. They're scared of a drop, but they miss the big basic change in how profits work. Let's look at how much extra power a silver mining company has. This is the hidden strength in the mining world. Think back 2 years. Imagine a normal Maine silver mining company. Back then, silver was around $30 an ounce. To get 1 ounce of silver from the ground, blasting rock, crushing it, processing it, cleaning it, and paying workers, it cost them about $20. This is called the all-in sustaining cost. So, with $30 coming in and $20 going out, the company made $10 profit per ounce. That's a 33% profit. It's okay, but not amazing. Now jump to today with silver at $115. People who doubt will say inflation pushed up mining costs. They'll say diesel for trucks costs more, workers want higher pay, and steel for machines went up. And they're correct. Costs did go up. Let's be nice to the doubters and say the cost to mine that same ounce jumped from $20 to $25. That's a 25% rise in costs. But check the money coming in. The selling price went from $30 to $115. That's almost 4 times more. Now here's the key number. Money in is $115. Cost is $25. Profit is now $90 per ounce. Stop for a second and think about that. When silver was $30, profit was $10. Now at 115's, profit is $90. Silver price went up about 4 times, but company profit went up 9 times. This is called operational leverage. It's not straight. It's exploding upward. But when you check the stock charts of these mining companies, are they up 900%? No, maybe up 200% or 300%. They're way behind the real money their companies are making. The market prices these stocks on fear of a crash instead of the real cash coming in. This gap makes an empty space. An empty space that will fill with a big, fast price change. Investors sit waiting for silver to fall to $80 or $70 so they can buy cheap. They look at old charts from 2011 or 1980 thinking history will repeat with a huge drop. But they don't look at what kind of rise this really is. This isn't wild betting from borrowed money on COMEX futures. This isn't people trying to control the market. This is a money system event. The jump to $115 isn't because silver is suddenly worth way more compared to other stuff. It's because the dollar, the thing we measure with, is losing its strength. The dollar's buying power is fading fast. And silver just shows the temperature of this failing system. So mining companies' costs stay in dollar terms, but their product gets priced in real money terms. This makes profits grow like never before. Think about the next 3-month money reports coming soon. These mining companies will show cash coming in that makes tech companies look silly. They'll have so much cash they won't know what to do. They'll pay off all debt. They'll buy back tons of their own shares. They'll start paying big dividends, maybe 10%, 15%, or even 20% compared to today's stock prices. And when those reports come out, the computer programs will go crazy. The big number funds looking for good value and payouts will have to pour money into this small area. Pension funds, needing anything to beat real price rises, will have to put money here. But here's the issue. The door is tiny. The total value of all main silver mining companies worldwide is smaller than one okay tech stock. When billions from big investors try to push into this area chasing those $90 profits, there won't be people selling. Who would sell a company making money this fast? It won't rise slowly. It will shoot straight up. It will jump big overnight because no shares are there at old prices. We're in the I don't believe it part of the market cycle. This is the riskiest time for people who don't know, but the best money time for those who do. Most people think the price is fake. They think someone controls it. They think government will take it. They find every excuse not to buy. Stuck from bad times before. At the same time, smart, quiet people who get the math are grabbing every share they can. They don't care about today's stock price. They look at price compared to future profits, which is super low now. You have to know mining uses up resources. Every ounce out of the ground is gone forever. Normally, the market hates that. But in super high inflation or money reset times, the silver still in the ground becomes the best thing on the books. Right now, the market gives almost no value to silver still underground. They only count today's cash. When people realize the dollar won't recover, they'll start valuing the underground silver. They'll count ounces in ground times $115 and redo the company value. That's when you get stocks that go up 10 times or 20 times. We're right at the edge of this waking up. The math can't be argued with. Profits grew almost 1,000%, but stock prices stay old. This weird thing can't last. It's impossible math. The gap has to close, and it closes by stocks shooting up to match the metal price. Don't get caught by daily ups and downs. Don't freak if silver drops $5 tomorrow. It's just noise. Watch the profit spread. Watch the gap between digging cost and selling price. That gap kills people betting against it and makes fortunes for those betting on it. To get how big the trap is that world markets fell into, we first have to break a wrong idea. Wall Street acts like all raw materials are the same. They mix wheat, corn, oil, copper, silver together. They think supply and demand fix fast and perfect everywhere. Price up, more supply comes. Price down, supply goes away. This idea fails badly with silver, and that's why price sits at $115, not $30. Let's look at farming first. Economists call this flexible supply. Picture a farmer in the middle of America. He grows corn and soybeans. Suddenly, from drought somewhere or trade fight, wheat price triples. Farmer checks futures on his screen. Wheat looks most profitable. What does he do? Easy. Next year, he plants less soybeans, more wheat. In 6 to 9 months, tons of new wheat flood the world. Shortage fixed. Price falls back. High prices fix themselves. That's the idea of perfect markets. Now try that with silver mining. Silver price shot straight up. It's at 3 times old highs. Profits yell to make more. The boss bangs the table, wants more silver, tells experts to find more, tells workers to dig faster. But rocks don't listen to price. You can't grow silver. You can't make it big in a lab. You have to discover it. And the hard fact everyone ignores, easy silver is all gone. Easy stuff taken 50 years ago. Big old deposits like Potosi and Comstock are old news. Now miners grind tons of rock for tiny bits of silver. Quality drops every year. More dirt moved for same silver. It's fighting nature's rules, and nature wins. Even if lucky find big new spot tomorrow, how long to make it a real mine? Not 6 months, like farmer? Not 2 years? Average time from find to first, silver is over 10 years? Think about it. 10 years for approvals, environment checks, deals with governments, water rights, roads in far mountains, deep holes, big plants. So price at $115 today, more supply won't come till 2036. Next 10 years, no help coming. Supply stuck. Might even get smaller. This leads to second trap part, the side product puzzle. 70% world silver comes as extra from mining copper, lead, zinc. Copper mine doesn't care about silver price. It cares about copper price. If world economy slows, which looks likely from debt mess, copper and zinc demand drops. Copper mines cut back or shut. When copper mine stops, silver from it vanishes. Doesn't matter if silver at $500. If copper mine closed, silver stays buried. This scares factories using silver. Price could skyrocket showing need for more, but supply falls because copper world shrinks. That's a supply crush. It makes itself worse. Now check demand. Factory need for silver isn't like jewelry. If gold jewelry too pricey, people quit buying. Demand drops fast. But silver different. Silver best at carrying electricity. Needed for green power switch. No solar panel without silver paste. No electric car without silver parts. No smart chips for AI without silver links. For big company like Samsung or Tesla, silver costs tiny part of total. If silver in panel goes $10 to $50, margins hurt. Yes. But they can't quit. Can't swap it. Science won't let cheaper equal thing. So they pay any price. They must. Demand doesn't bend. Inelastic demand hits inelastic supply head on. Factories start to freak. They skip futures price on COMEX, call refiners direct for real metal delivery, skip paper stuff. Reports say extra fees on big industrial bars jump. Delivery waits go from weeks to months. This is raw material trap. Paper market thinks it controls price with borrowed money and computers. But real world runs on actual shortage. When Apple, Samsung, Elon Musk see not enough silver, they won't buy paper deals. They'll buy mining companies, build their own supply, like car companies did with lithium. Paper promise useless without real metal at factory. Back to stocks. Mining companies own future supply. They hold only important piles. Market recalculates their underground value now, not on digging cost, but on replace cost. Replace cost basically endless. You can't just find new spot. Farmer can plant more wheat. Central bank prints more dollars. But silver miner guards limited key resource running low. Trap closed. Shortage built in. Price alone won't fix. Needs years. During years, price no limit up. Goes as high as needed to make holders sell. But who's selling? People stacking don't sell. Central banks buy. Factories hoard. Entering super long rise making 1970 look small. Data clear, rock facts real. Only question, position before world sees? Watching start of biggest money move in history. To get size, stop thinking small buyer of 10 ounces. Think pension boss with $100 billion for others. Last 40 years, big funds, simple plan. 60% stocks, 40% bonds, 60-40 mix. Worked when stocks down, bonds up for safety. Inflation low, rates falling, system steady. But that time over. Stocks and bonds now move together. In high inflation, both drop. Saw in 2022. Seeing now. Safe bonds no longer safe. Lose buying power, sure. Where money go? Question keeps bosses up. Can't hold cash. Loses 10% year. Can't buy more tech. Prices crazy high. Can't buy houses. Yields fall as rates up. One left, underowned, cheap, opposite debt crash. Raw stuff, especially money metals. Check now. Average world pension holds under 0.5% in gold, silver. Most zero. Ignored decades. Called old junk, no payout. But math changed. If pension moves just 1% to precious metals for inflation guard, money flood, huge. Numbers. World pension money over $50 trillion, 1% is $500 billion. Yearly silver mined about 800 million ounces. At $25, worth $20 billion. At $115, under $100 billion. See mismatch? If even 1 to 5 pension money tries silver, $100 billion, it eats whole yearly supply. Every ounce from Peru, Mexico, China, Russia. Nothing left for Apple phones, Tesla cars, your coins. Why price shoots up? Not small buyers. Smart money jumps ahead of big shift. Early signs here. Rich family groups first. Fast, no slow committees. Buy real bars. Store safe in Singapore, Switzerland. Quiet buy best royalty, stream shares. Then school funds, small pensions, big country funds. When Norway or Saudi funds move, game done. They handle trillions. If dollar not safe, store. Diversify hard stuff. Buy mines direct. Moving from paper world to real stuff world. Paper values from cash and rates. Real world from who holds what, who has copper, uranium, silver. Move not just inflation, geopolitics too. World splits. East, China, BRICS, grabs gold commodities fast. Trade in own money backed real. West, still paper games. Big funds see. U.S. bonds lose if dollar trade stops. Only neutral asset, no one's debt, is gold. Silver like gold, but faster, harder, small market. High-speed money play, mining liquidity drying. Track big mining ETF volumes. Shares out shrink. Locked by holders not selling cheap. When big funds buy big, find empty shelf. Order $50 million mid-silver stock, jumps 20% day. Chase up, buy panic, not want miss only winning area. That's melt up, not slow climb, violent change from scramble, scarce safe thing. Don't forget computers. Markets run passive money, number models. Silver up, sector weight up in indexes. Forces Vanguard, BlackRock buy more mining to match. Loop, buy makes more buy. Beginning cycle. Big funds barely started, still deny. Hope Fed fixes inflation to 2%. Hope world calm. Hope no plan. Data says inflation built in. Debt math. Money weak and sure. When funds give up, gates open. Money stuck, bonds, tech, 40 years, rush tiny precious hole. You ahead sell to them. Sell mining shares to pensions at 10, 20, 50 times your buy. Not guess. Ahead, inevitable money flow. Move started. Bridge burns. No old mix back. Only forward hard assets. Unthinkable now sure math. Wealth shift paper to hard begun. Window close ahead heard. My last plan simple but hard. Don't sell early. Stocks double. Want cash out strong. But remember trade shape. Market revalues whole area on money fall, not normal cycle. True value, not now cash, but underground reserves, only safe thing left. Silver miners could go 10, 20 times today's value. Melt up time. Don't trust words, trust metal weight hand, need low-cost diggers list, full liquidity mess breakdown. Click description link for full info, not money advice, survival info. Stay safe.